well. Today we'll talk about the capital adequacy requirement, which is the requirement for Basil II capital adequacy. The calculation what we're going to do today is the risk weighting of balance sheet assets. As we know in the commercial banking chapter that every asset of the bank balance sheet need to be risk weighted, which are based on the liquidity requirement of the Basil II capital adequacy standard. Now in the following is showing what will be the risk weighting for each of the asset class. Now for the first one is 0% on the notes, coins, claim against central governments and central banks. So if in the bank balance sheet asset, if there is any claim against the central government, central bank or notes or coin, the risk weighting will be 0%. 20% claims against the local government, domestic banks and international banks. So any claim against international and local banks, there are 20% risk weighting will be allocated. 50% on the loans secured by residential mortgage, and 100% all other assets and claims against counterparties. So in the last part, which is 100%, which is falling under all other claims and counterparties. Now let's look to an example that will clear your idea. In this example, application of the asset risk weighting, there are different types of asset has been showing in here. This is the risk weighting and this is the risk weighted asset value. So in the left hand side you can see the cash and Commonwealth government securities. As per the previous slide, it said that any claim against the central government or the central bank, risk weighting is 0%. So asset value for the cash and Commonwealth government securities is $2,000. Risk weighting is 0% and the risk weighted asset value is 0%. For the second one, the loan to the local government, the asset value is $1,000. Percentage of risk is 20%, as per the previous slide, which stated that any claim against the international bank and the local bank is 20%. So 20% risk weighting, and the risk weighted asset value is $200. Residential mortgage is secured by 50%. So 50% of $24,000 is $12,000, which has been included here. Loan to corporations. So any loans to corporation, which is 100% risky, and as per the capital adequacy requirement, which is the previous slide, if you look at it here, that 100% all other assets and claim against counterparties, so which is 100%. So loan to corporations, which is coming under the 100%, which is $20,000. So this is the risk. This is the asset value. So if you look at the asset value is $47,000. If you add all the risk weighted asset value, which is $0, $200, $12,000 and $20,000, which is $32,200. So this is the risk weighted asset value. Now the total capital requirement according to the Basil II, which should be 8%, and out of this 8%, 4% is tier 1 and 4% is tier 2. So 4% of this is basically $1,222,000. Now here is showing the billion, so we'll just ignore the billions. So total 4% of or the tier 1 capital requirement should be 1,288, and the total capital requirement would be 8% of this amount, which is $32,200, so which is $2,576. So the first question is what is the total capital requirement, which has been given. Second question is what is the tier 1 requirement, which is $1,288, and the third question is how much the company or how much the bank can raise as a liability from the market. So the bank can raise will be 424 as a liability, raised as a liability. Let's take a real example. Now this is a bank balance sheet. Now the two different period has been listed here. One is the current period and second one is the previous year's period. So we'll ignore the previous year one, but we'll look at the current year period. Now the assets value has been given. Now Federal Fund sold and security purchase under the agreement to resell, which is the repurchase agreement or repos. The amount has been given here. Residential mortgage, credit card, direct or indirect customer, and commercial bank and commercial lending. So all this amount has been given. So the total loan and leases is 683,386. Other earning asset is 39,112. Cash and cash equivalent is 32,575. Allowance and lease losses is 79,854. So the total value of the bank balance sheet is 834,927. Now, as per the previous question, there are three questions what you need to answer. Number one is calculate the total capital requirement on Basil II. Question 2 is calculate Tier 1 capital requirement based on Basil II. And third is how much this bank could raise as liability from the market. Now, to do this calculation, we need to basically look at the first slide where the percentage of risk weighting has been given. As we know that the risk weighting will be 0% on notes and coins claim against central government and central banks, 20% on claim against local government and domestic and international bank, 50% on residential mortgage, and 100% on all other assets or counterparties. So federal fund or the repos is basically coming from the federal government fund or repos, which is very liquid asset. So risk weighting is 0%. Risk weighted asset value is 0%. Residential mortgage, as we know, 50% risk weighting. This is the amount, which is 89,179.5. Credit card is an unsecured lending, 100% risk weighting. So we'll put the full amount here. Direct and indirect customer, the original value is 119,920. As this is 100% risky, so we'll put the full value. Commercial lending, which is 110,163. As we know, commercial lending is 100% risky, we put the full value. Other earning assets, as we do not know which types of assets these are coming under the other earning assets, so we will take it as 100% risky investment. So we'll put the full value in this side. Cash and cash equivalent, as we know, cash and cash equivalent doesn't have any risk, so the risk weighting will be 0% and risk weighted asset value is 0%. Allowance for the loan and leases, which is 79,854. As we know, the allowance is like a reserve fund where they put cash as a reserve, so the risk weighting will be 0% and risk weighted asset value will be 0%. So if we add all this value together, which is 456,396.5 and the total asset value is 834,927. So the first question was that calculate the total capital requirement based on Basil II. As we calculated, the risk weighted asset value is 456,396.5 based on the previous slide, which is this value. 8% of this is $36,511.72. So what you need to do, calculate the risk weighted asset value, multiply by 0.08. You'll get this number. Second, calculate tier 1 capital requirement based on Basil II. Now, as we know, according to the Basil II requirement, tier 1 should be 4% and tier 2 should be 4%. So 4% of this amount is 18,255.86. The other way we can do it is basically half of this value, which will be the tier 1 requirement. And the third question is how much this bank could raise as liability from the market. So as we know, the total asset value of this company was 834,927, and we know the total capital requirement is 36,511. So if you minus this amount from 834,927, we'll get 798,415.28, and that is the amount this bank can raise as a liability from the market. Hopefully you like the video and this calculation is clear to you. Thank you very much for watching this video.